Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Friday, April the 15th, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures, and each morning we come into these morning leap sessions to do our trade plan setup for the day. We take a look at the market, macro to micro, the structure of the market, what our trade levels should be, what our targets are, and what our hypotheses are for the day. This is a subscription room, so if you want to come in and check us out, I'll put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not I'm having a tough morning. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence and your own trade plan and your own risk metrics. Sorry about that. This isn't a commercial venture. There's no website. There's no blog. This is just some retail traders getting together. We do live trading in these live go-to sessions, and then we do the pre-market session as well. Contact me at quantumleapfutures@gmail.com or give me a call on my cell, 647-545-8065. You will need a Skype account. It's easy to do, free, and send me a Skype request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. If you like this video, there's over 300 of them up on YouTube. Each morning we do these, so you can take a look at our past performance and our past hypotheses, how they played out. And then if you like what I do, please follow me on Twitter at Crazy2. Okay, so yesterday our main hypothesis was to come down into this 69 area, somewhere between 71 and 69, and then bounce, rotate up through the prior day range, and go hit those upward targets at 80 and a quarter, take out the overnight low, and possibly get up to 83 and a quarter, and then our ultimate target was the microcomposite value area high at 86.50. Our secondary hypothesis was to come up into the 79, 80, 81 area, find responsive sellers, and then rotate down through the 69 and down into starting to fill that gap down at 64. And then our alternative hypothesis was to open up and the gap zone and just sort of chop around. And we kind of had a combination of the three hypos. It was very tight range, only a 10-point range yesterday. The high was 81.75, low was 71.75, and we basically just thought the 77 area. The 75 and 76 area has become extremely important, and I'll show you why in just a minute. Last three sessions, and even tonight with the VPOC being down at 73, we're finding liquidity between the 73 and 77 area right now. So it's going to be an interesting day. So I like to start my day out every day with the same routine. I take a look at the macro to the micro in terms of where are we within the trend on the different time frames. And I'm simply using a 9 EMA, a 20 SMA. Those are the moving averages that I like. You can use whatever you like, but I use these because I've been using them for years. And then I'm looking for slope and separation and where the trend is being challenged or violated. You can see this monthly trend has been beautiful for the last several years. Then late December we violated it, took it back at the end of the year, and then fell below again on January and February, and then March and April we've taken it back. So big time consolidation zone happening right now on the monthly, but we are above the 9 and the 20, so we could get continuation up. The weekly, we've had this strong weekly move for the last 8-9 weeks, and we're above the 9 and the 20. We are getting separation. We don't have slope on both, but price is paralleling the 9 quite nicely. Currently, our week open is 2041 and we're currently above it. And I realized that my critical mass is calculated wrong. Is our week open? 41? Yeah. Okay, so I'll just fix that on my chart. So the weekly is still in an upward trend. Going to the daily, you can see that we had the strong move up over the last few weeks. They came down, they tried to violate the trend, got back above, and now we got continuation. A little bit of a technical gap right here on the daily. A move down to close this gap will take us down to 2060. The bottom of that gap zone is about 2058, I believe. So we can watch for that today. On the intraday, we've had this strong up move in the intraday 4-hour. Created a couple tech gaps, but closed them out. Right now, we're just breaking below the 9 and the 20. We had our first close below right here, and currently we remain below. A move down to the 20 to test it will take us down into the 2066.50, and that's just below another key level at 2067. But the trend itself is still up, but it is weakening. On the 1 hour, you see that we've rolled over. We had this head and shoulder pattern on the 1 hour, and we're now in a downward trend, and we've got good slope, good separation, and prices paralleling nicely on the 1 hour. On the 30-minute, we have been moving down through the European session of the Globex, and we just rallied a bit on the news. We had a fairly decent news release at Empire State Manufacturing beat, and so we're just sitting right on the bottom of the 9 right now, trying to get above it, but the trend is down, but is being challenged right now. A break above 74.50. I'm watching 74.75. That's going to be a key trade area for me today, is that 74.75 for many reasons, and I'll get into them when we get into the structure. And then we've had this strong downward trend, and then off of the news, we've broken to the upside, and we're testing 74. So the trend is being challenged on the 15-minute, and then same thing on the 5-minute. We came down, we're getting this consolidation. We one-ticked the low overnight. We had a weak low at 71.50. We one-ticked it down to 71 1/4. This could be a failed auction. We moved up into balance with 73. Now we're testing the other side of that balance and a LVN from the prior night. So the trend is, we could start to get a trend to the upside. Okay, so let's take a look at the overall structure of the market. Just putting it into context. I know I'm repetitive, but for people that have not seen this, these morning sessions, this is your first time, I have to put the context. So in the last quarter of the 2015, we had created this balance area with a value area of the microcomposite at 86.50 high and 2008 low. And we had this nice Gaussian distribution right here in the upper distribution of a double distribution microcomposite with the key microcomposite LVN at 2016. The last price that we tried to hold before falling out of balance in January was down here at 34. So once we fell out of balance, we came down here, chopped around, created balance, accepted price, broke out, worked our way up, got back up into the first spot we tried to hold value after breaking out of it at the 78, 79 area. Then we worked our way up, and we came up here, and we accepted that, tested that 34, chopped around there, and then started working our way up towards the microcomposite VPOC of this area at 63.50, and more importantly, the composite VPOC at 2061.50. In other words, the most traded price going all the way back to 2013. So we come up here and we start chopping around in this upper distribution and taking out some of these naked levels that we had, and then we finally fell back in, came back in, created a very strong price acceptance at this 20, 40, 50. In fact, at some point in time we get back here, there's a possibility that the composite VPOC will shift down to 2040, and that's going to be one of the first signals that I'll be looking for that the interim high is in, and we can start looking to the short side. But we accepted it this time and then worked our way up, accepted it a little bit higher at 48. I always look for where we last accepted before the gap, and that was at the 48. We gap up and we come up here and take out the 69.75. We had taken it out in the Globex. We had that Globex fractal high at 71.50, and then not yesterday, but Wednesday, we gapped up, and then the 2-day microcomposite VPOC. It's not a valid microcomposite because we're really not in balance here, but I wanted to see where the 2-day price acceptance is, and it's at 75.75, and that's important because of the fact that we've got the strong liquidity going on right now in that 74 to 75 or 74 to 77 range, around that 75 and 76. So right now we have this gap, and the gap starts at 64 and goes down to the 58.50 with the most traded price right in the middle of that gap. So 64 is going to be our line in the sand below, and then a key level is going to be, a key trade level is going to be the 74.75, and I'll show you why when we get to the intraday charts. Main target right now above is the 76 area, and then the gap close at 77, and then the 79 is going to be my key line in the sand above. Above that, I think we're going to get continuation and a move up into 86. You know, it is Friday, so we could just chop around and then pick a direction and drift the rest of the day, but we have to see what type of open that we get. Right now, we're going to open up in the lower wick of this prior day with somewhat of a weak low, but it is a failed auction right now, so it's going to be interesting in the morning. Just quick look at the news before we get into the intraday. We do have University of Michigan consumer sentiment and inflation expectations coming out at 10. We've got G20 meetings all day, so that should be interesting with all the stuff going on in Europe right now, with whether or not Britain's going to leave the European Union, the Brexit, or whatever they're calling it, Brexit, plus everything that's going on with the economy and there. And then there's IMF meetings today as well. So some news this morning, but not huge. So taking a look at the overnight action, we were actually trading it last night again. I was running long here, and then I got short. Darren got a nice short in as well. Marge got the long. This right here I want to point out, because this is why I was long. There's a bunch of different reasons why I was long, but we had this FUBAR, Mr. Sneaky, and then we which created a technical gap, but we also created this gap. And you know, when you see these gaps, and this is not a Globex gap, this is just a gap between 75, you know, we closed at 78.75 and we opened at 78.50, and then they moved down and left that gap alone. So when we came down here, I got long down in the 75, 75 or 76, and basically I was waiting for this gap fill, and Marge and Darren both got a piece of the move up, and then Darren was quick on his feet. I missed it, and he got short. But we opened up, we tested that 79 area, and then failed, came down, put a higher low, a lower high in, and then we just sort of chopped around until Europe, and then we moved down, and they've been chopping down in the lower distribution of the prior day, testing the RTH low from yesterday at 71.75, creating this weak low, and then we put in a one tick failed auction, and they moved up through balance. The LVN overnight is 74.75. That also coincides with the value area low from yesterday. So that's going to be a key trade level above the 74.75. I'm going to start to look long, but right now I'm thinking that this weak low is going to get taken out down here at the 71.25, and I'll be looking for a move down into that 74. So if we this is a kind of a B-shaped profile, but we kind of a double distribution. I think it's closer to a double distribution. So the other thing, I got to do that because our weekly low, right, our week open, I should say, is 2041. Our 20-day ATR is running at 22. So our critical mass is actually down here. We're above critical mass right now. Critical mass is sitting at 63. So that's just below that start of that gap area, and just below, well, right in this cluster of a whole bunch of stuff. You've got the start of the gap zone at 64. You've got the microcomposite VPOC at 63.50. You've got the naked VPOC at 63.25 that we gapped over. We've got the composite VPOC at 61.50, and we got the gap fill that we gapped over at 60, the naked close at 60.25, and our 20-day ATR downside target off of our overnight high of 2080 is 2058, which is just below this this gap. Just so that you know, here's the gap that I'm talking about right here. This is the gap zone from the high of what was the date there? Can't read my labels. The 12th, and create this gap zone. So you know inventory is net short, and if we get above the 74.75, then I think the shorts are going to get squeezed, and that's why that 74.75. But as long as we stay below that 74.75, I'm looking for a move back into the 69 and a possibility of coming and testing this gap. But we have to just play it out as we see it. So as it stands right now, our overnight high is 2080. Our overnight low is 71.25. Our overnight VPOC is not likely to shift, which is at 72.75. We've got this LVN right here at 74.75. Don't need this. So right now, we've got the closing swing low, the value area low, and the LVN from overnight. So this is going to be my key trade level this morning. My key line in the sand above is going to be any break above the overnight high. Oh, I don't want to edit that one. Just And then the key line in the sand below, of course, is going to be that 74. Okay. Actually, you know what? Is 66.75 a better? Well, this is going to be our warning line. All right. So we've got 74, 75. Obviously, the overnight low is going to be important. I don't think that the 71, 75 is going to be a level that's going to be strong support. You've got the overnight VPOC just above it and the overnight low. And then you got a really juicy target down here at the 69 area. It's really blunt in this area of the profile, and there's really not a lot that you can use. I'm going to use the 6950. I don't usually use an HVN or microcomposite high volume node as a trade level, but we've got the 6850 just below, so if we get below it, I can get a short into the 6850 if I'm not already short, and get funded by the time we get there, and then see if we get a push through down to the warning line at the 66.75, and then a break below down into this area. Anything below 64, I'm looking for a move to the 61.50 and the takeout of the 60.50 naked close. What's the center line of the gap? The center line of the gap is 61.25, so just one tick below that 61.50. And then below there, we've got our 20-day ATR target at 58, and then the next key level below is going to be the 56.55 and then 52. Anything below the 52, look for the 48 area. Actually, 48. And then 46, 43, and then the next big target below is back at that microcomposite VPOC down at 40.50. I think we're going to have a tight range again today if we don't break out to the upside, or we don't flush. The SPY, it is options expiration today, and the max pain on the SPY is 199. So and we're currently, where are we trading on this? Where is the SPY right now? So 207.80, and the max pain is all the way down here. So I don't think we're going to hit max pain today unless we flush. Okay, to the upside, above 74.75, obviously the key target above right now is the 76 and 77 area. Our close yesterday was 77. And then if we get back in value, I'm anticipating a move all the way up into the value area high from yesterday at the 78.75. Above there, takeout of the overnight high and that test of the key line in the sand. You know what? I'm going to move the key line in the sand up. I think it's safer to use the breakout of the fractal high at the 81.75 and target that 83, 86 key line in the sand and then up. So my main hypothesis for the day is we're going to open auction in range but just outside of value. I'm looking for them to come up and test the 74.75. If they get in it and break above, I'm looking for them to come up into the 76, and then I'm looking for them to chop around, test the 78, 75, other side of value, fail, and work our way back through value and range and down into the 68.50. That's my main hypothesis, and possibly down into the target down at 64. My secondary hypothesis is to chop around, come down, try to bounce off of 71, 75, fail, come through down to the 68.50 area, find buyers, and then move up through and continue the rally up. And then my alternative hypothesis is we get back into range to test the value, take out the overnight low, possibly come down to the 68, 69 area, come up, and then chop around again on low volume into the weekend, somewhere in between that 74 and 79 area. So those are my main hypotheses and my trade levels. Hopefully it's not too confusing. If it is confusing, just let me know. Just taking a quick look at the book map before we wrap up here. You can see that liquidity is still down below between the 72 and 69 area. We're getting some volume going through right now in the 74 as they battle this 74 area in the value area low. So that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.